community banks, and they are the rock stars in this process in the PPP program anyway. And I have a question, Secretary. They had 800 SBA banks were approved under the SBA system prior to this. Some 5,000, almost 5,000 banks made 4.3 million loans, and so far put out $520 billion to companies under 500 employees. And by the way, 99.8% of that $520 billion went to companies with fewer than 500 employees. So it did what we wanted to do. And 93% of those loans are $350,000 or less. My problem is this, Secretary, is that I think we have on two levels, one in the bill itself and one that is happening now in what we've done here, is that we've disincented people to come back to work even now. And my state is beginning to open up. And by the way, safely, we have two constituent groups out there, the military and essential workers, to look at how they manage their protocols and so forth while they manage through this crisis. And it gives me great confidence that we can open the economy up. The unemployment premium is keeping people from coming back to work. There are employers in my state who really want people to come back to work, but they're saying, no, why would I do that? I'm going to enjoy this premium right now, and then I'll call me back in a couple of months. The second thing is a lot of small employers actually encouraged a few weeks ago their employees to go on unemployment, even though they were getting money, and they were hoping that they would, when the revenues started, when they opened up, they would begin to then bring the people back and then use the loan to pay salaries in there. How would you help us think about how to deal with that? The Labor Department at one point said they were going to put some rules out about this premium. And the second thing is the enforcement behind if an employer wants an employee to come back to work, an employee should no longer be qualified for employment insurance. Would you address those concerns, please?
And if you could be brief, please.
Thank you. And let me just say, we are aware of the technical problem here, and we want to have a technical fix on the unemployment insurance. But specifically, let me just comment on the PPP. If you offer back a worker and they don't take that job, you will be required to notify the local unemployment insurance agency because that person will no longer be eligible for unemployment.
Thank you. Senator Schatz.
Thank you to all of the testifiers and panelists. Chairman Powell, I want you to take us through two very simple scenarios. The first is if Congress takes no additional action in the next couple of months. And the other is if Congress steps into the breach and passes another fiscal policy bill. I know you are loath to weigh in on specific policy recommendations, but I want you to talk in terms of the overall economy about the impact on quarters 3 and 4, should we decide to say that the bills that we've passed are enough?
I think it really depends on the path of the economy, honestly. As I said, my concern has been the risk and possibility of longer run damage to the economy through unnecessary insolvencies on the part of households and businesses and long-term unemployment. And that if we find ourselves in that place, we may have to do more, and it could also be something that Congress would want to do. I think,
so,
go ahead.
So according to census data, about half of small businesses are going to run out of cash within a month. States are slowly reopening the economies, but consumer behavior is not going to rebound to normal within a month. Do you think that there's going to be a strong enough rebound in economic activity in the next 1 to 3 months for that alone, for what we've already done alone, to prevent thousands of small businesses from going under? Or do you think there is a need for additional fiscal policy?
So I think we're going to see here fairly quickly how the reopening goes. And it's very hard to know. We haven't done this thing before. No one's done this sort of thing before. So I think you were going to be getting a lot of information fairly quickly here in terms of what may be needed. I am reluctant to, I make my comments on fiscal policy at a general level. I'm reluctant to talk about timing and specific provisions. It's really not the Fed's role. We do try to stick to our knitting.
So why don't you go ahead? I'll give you an open-ended question. Please provide the panel with some comments about the importance of fiscal policy over the next 6 to 9 months.
So it's a combination of a couple things. First, just as I mentioned, the risk of lasting damage to the productive capacity of the economy through the labor force because of longer term unemployment and through unnecessary avoidable insolvencies on the part of small and medium-sized businesses. Those two things create a real risk. The other thing I'll point to is what we do is we address liquidity problems, not solvency problems. We have lending powers, not spending powers. So over time, and this is not a certainty, this is a possibility, over time, solvency problems emerge from liquidity problems. Liquidity can develop into solvency with the passage of time. That all depends on the path of the economy, how well the reopening goes, and which path we find ourselves on. So I think, I think what Congress has done to date has been remarkably timely and forceful. I think you could say the same about what we've done. I do think we need to take a step back and ask, over time, is it enough? And we need to be prepared to act further. And I would say we are, if the need is there.
Seems to me that the distinction between a solvency problem and a liquidity problem applies to big institutions, big corporations, even governments. But when you're talking about a small business or a family, there's not much of a difference between having a cash flow problem and simply being flat broke. And it seems to me that that distinction, which you are able to make and rightly do as the head of the Federal Reserve, is a rather abstract one for the companies that are 8 persons and the families that are sort of at economic death's door. They don't distinguish between a solvency problem and a liquidity problem. They've run out of money. Secretary Mnuchin, Section 4114 of the CARES Act states that carriers receiving payroll grants shall, quote, refrain from conducting involuntary furloughs or reducing pay rates and benefits until September 30th, 2020. But on April 21st, United Airlines received $4.9 billion. And on May 1st, United announced that it would reduce 28,000 workers from full-time to part-time within 2 weeks. Was that announcement a violation of the terms of the payroll support program?
And again, please be brief.
We believe right now that they're in compliance with the program.
Right now, were they violating this when they first announced it?
Again, I don't want to go through specific situations with specific companies. I will say right now, we believe they are in compliance with the agreement.
Thank you.
Senator Tillis.
Thank you, Mr. Chairman, and Chairman Powell and Secretary Mnuchin. Thank you for your, I think, heroic work. Your team's done a great job under immense pressure, and I appreciate it. One thing I want to go back to, it was mentioned by some of my colleagues about the CMBS. I like the fact that the administration expanded south to cover legacy CMBS. I think that that's a good step. I personally believe that commercial real estate is under severe stress, and it's likely to get worse before we start seeing a turn and a more positive growth or more positive indicators from the economy. One thing that I am concerned with, Secretary Mnuchin, is right now it looks like we've only got about 15% of the from the American Hotel and Lodging Association, about 15% of forbearances of any kind from the CMBS servicers or service providers. That seems like a low number to me. One, I'd be curious if you think that that's low given the circumstances right now. And then what more we may need to do congressionally to get the servicers and the borrowers to the table.
It does seem a bit low to me as well. We do have a structural problem of loans that are in securitizations and how they have to be dealt with the special servicers. So obviously, as it relates to the banks have much more flexibility. But this is a technical issue, and we may need to come back to Congress to work with you on a technical fix.
Well, thank you. I'd like to hear about that. I think that we need to do it because I'm gravely concerned with the retail shopping, the hotel lodging industry, and those are industries that are largely going to lag behind some of the business startups that we're seeing in some states. So I'd be interested in your feedback. I was also kind of curious about the TALF program and potentially other areas where we should expand. I'm thinking about new issue CMBSs, RMBSs, installment loans. Have you thought about that? And have you also thought about less than AAA?
We've thought
And that would be
about,
to our Chairman Powell.
we've thought about all of those, and I would just say, I want to thank the people at the Fed and the Treasury who have worked around the clock to get these facilities up and running. We've prioritized these, but I assure you, as the Fed chair and I have said, we will look at all of our options to make sure we support jobs across the spectrum.
I'd particularly be interested, you don't have to expand on it here, but on new issues, I'm very interested in that and see what you're gaming out, what you think's within the realm of possibilities. Chairman Powell, do you have anything to add to that?
No, just our commitment, as the Secretary suggested, to keep our minds open and looking at evolving those facilities as we learn more.
Secretary Mnuchin, I have one question for you, then a final question for the both of you. I'm thinking more about the tax burden right now in middle-class households. Do you think any of our future work here should include a treatment for maybe a reduction in the tax burden for middle-class households, and whether or not that would be helpful?
I think that's something that should be seriously considered.
Now, the final one that I have, Chairman, I'm going to keep the time. I have a growing sense that we have a bit of a donut hole. Some businesses that are not quite right for the Paycheck Protection Program because of their size, they're not quite big enough for the nature of their business to be eligible for the upcoming Main Street lending facility. So have you all looked at, and Secretary Mnuchin, I appreciate what you said about the 8-week covered period. I think there are a lot of mechanics in there and what could be included as a forgivable portion of the proceeds. All of that we need to look at. We need to know fairly quickly. We know the covered period is going to take congressional action, but when we massage the PPP, that may fix the problem for some of these people I describe as being in the donut hole. But are you seeing that now? I mean, we don't have the full information on Main Street Lending Act, but I get a sense that there's going to be some people caught in between. And what are your thoughts about more we need to do there? That final question is for both you and Secretary Powell.
I would say our objective is to make sure that there are people that don't fall out in between. So between the PPP, the EIDL loans, and the Main Street program, it is our objective to try to cover as many of those companies as possible.
In fact, that's one of the reasons why we went to a smaller minimum loan level on the Main Street facility in the last turn of the term sheet.
Thank you, Chairman Powell and Secretary Mnuchin. I also look forward to seeing the Main Street Lending Act mobilized in the coming couple of weeks. Thank you. Thank you, Mr. Chair.
Thank you. Senator Van Hollen.
Thank you, Mr. Chairman. Secretary Mnuchin, Chairman Powell recently acknowledged the need for additional fiscal relief, and just in this hearing acknowledged in response to Senator Menendez that state and local layoffs of police and firefighters, first responders, teachers will make a bad economic situation even worse. Do you agree with that assessment?
Well, I've recently provided guidance on the $150 billion we sent to the states that they can use that money for police, fire, and first responders without restriction. So I hope there would be no layoffs as a result of that relief. That was our objective.
Right. But in addition to them, so that just moves the burden onto other public service providers, including teachers, healthcare workers, public healthcare workers. Wouldn't you agree that layoffs of those workers or any workers just takes a bad situation and makes it worse?
I think it does. But I think the question that Congress and the Senate needs to address is who should pay for that, which taxing authority, whether it's the states or the federal government. And I look forward to working with the Senate on a bipartisan basis to address these issues.
You said which taxing authority. As you know, states have balanced budget requirements. The federal government doesn't. We just borrowed $3 trillion. It seems to me we need to take action here to prevent a bad situation from getting even worse. Let me ask you about the PPP program. A bipartisan group of senators have written and spoken to you about some of the unilateral and unnecessary conditions the Treasury regulations imposed on PPP. In fact, the Small Business Administration, IG, recently said that the 25% limit on forgiveness for fixed costs did, quote, not align with the language in the statute. Senator Rounds just raised another issue, which is a design flaw in the statute, in my view, regarding the June 30th deadline for qualifying for full forgiveness. The House in the HEROES Act reformed both of these provisions. Do you agree with the changes that the House made in the HEROES Act with respect to PPP?
I'm not familiar with their specific language, but I'm happy to look at it. But I do want to comment on this 75% issue. And SBA wrote back to the IG to disagree with that. And I've spoken to both Cardin and Rubio on this. The program was designed for 8 weeks plus overhead.
Mr. Secretary, I know what your position is. I just wanted to highlight the position of the Inspector General of the SBA. And in my view, you can't find that 25% limitation anywhere in the statute. I challenge anyone to take a look and find it there. I would ask you to take a look at the Rebuilding Main Street initiative that a number of us have put forward. I do think it can get bipartisan support and look forward to your responses there. Let me turn to Chairman Powell and just say that I believe that overall the Fed has acted quickly and for the most part necessarily and appropriately, but I have serious concerns about the actions you've taken with respect to the secondary market facility with respect to junk bonds. In response to Senator Sass, you emphasized that at least with the TALF program, you were essentially helping those with AAA ratings. But when you look at the secondary market facility, you have purchased junk bonds, and we have this strange situation where the same day we had unprecedented damage in terms of unemployment numbers, the stock market was in fact going up. And you pointed out that most of the people being hurt are those earning less than $40,000 a year. In fact, 40% of them have lost jobs. And it's not clear to me why putting money into junk bonds is helping folks on Main Street. In fact, it puts the public in a first loss position behind even the most subordinated bondholder and uses public funds to take on years and even decades of future cash flows with the price risk. Can you respond to that concern?
Thanks. I'd be glad to. So the only high yield bonds that we can buy are those of companies that were investment grade on March 22, but that have been downgraded, so-called fallen angels. These are some, in many cases, very large U.S. companies with many, many thousands of employees. And we made them eligible for the investment grade for the primary market corporate credit facility. And we don't want to have a cliff there where the investment grade markets are working well, but the leverage markets are not, non-investment grade markets are not. So we made a very limited, narrow set of actions to support market function in those markets, including buying ETFs, exchange traded funds. That's a portfolio effect, and that's had an effect to improve market function there. We may have to be lending money to those companies, but even better, they can borrow themselves now. And that's a lot of that has been happening, and that's a really good thing. So that's kind of why we did it. And it's a fairly narrow intervention. We're not buying junk bonds generally across the board at all.
Mr. Chairman, if I could just follow up briefly. I think a lot of those bonds were already in trouble before the intervention, and their trouble was not directly related to the pandemic. And if you could get back to me and just show me where the Fed has the authority to purchase this kind of below investment grade instruments, I'd appreciate it. Thank you.
Senator Kennedy.
Chairman Powell, do you believe that states and cities are going to experience revenue shortfalls as a result of the economic lockdown, try to contain the spread of the coronavirus?
Yes, Senator, I do think that's what we're seeing.
Do you think they're going to be substantial?
Yes, I do.
Is your municipal liquidity facility set up?
Yes, it is. Well, we're probably 10 days away, 2 weeks away from it actually being operational. but not quite yet. That is the
And
answer.
as I understand it, you basically will buy short-term paper like revenue anticipation notes from the states, which will allow those states to issue that short-term paper at a lower interest rate. Am I correct?
Well, they'll be able to issue it at all in many cases. So yes, we're supporting market function there. And that, by the way, that should support market function across the municipal markets in longer term maturities too.
Do you know how many states are prohibited by their constitution from borrowing money to pay for operating expenses?
I think 49 states have a balanced budget amendment or balanced budget requirement. I think that's
Yes,
right.
sir. But a lot of states have, in their state constitutions, they're prohibited from borrowing money to operate government. They can borrow money to build things, but not to operate government. You aware of that?
Well, I thought most states could borrow during the course of a year for maturities of less than a year to smooth out the inflow of cash, revenue anticipation notes, tax anticipation notes.
Right. Have you had a lot of inquiries about the municipal liquidity facility?
Yes, Senator, we sure have.
Okay. Secretary Mnuchin, do you agree with what the chairman said?
Yes.
Okay. Let me offer you an observation, Mr. Secretary. I'm not expecting you to comment on it. It looks to me like the game plan is to have Senator McConnell, Senator Schumer, Leader McCarthy, Speaker Pelosi, and you go off and negotiate a deal on the next package, if there is one. And then you will bring that deal back to the Republicans and Democrats in both houses. And if the past is any indication, the Republicans and Democrats in both houses who don't get to participate in the negotiations will moan and groan and complain and then moo and follow their leaders in the chute like cattle. I'm not sure that's going to work this time. I think that whatever deal y'all come up with is going to receive serious pushback from both Republicans and Democrats in both houses for a variety of reasons. I could, of course, be wrong, but I doubt it. Why would we not agree to allow the states to use the $150 billion that we have already appropriated to them to address shortfalls in their revenue base as a result of the coronavirus?
Well, Senator Kennedy, I just want to comment on the first thing. I have no intention of doing what you've just described, nor do I think I did that in the past.
Secretary. It's been done in the past. It was done last time. I'm not being critical of you.
In all fairness, Senator Kennedy, there were at least 20 or 30 senators of both Republicans and Democrats that participated in the detailed analysis of the last bill.
Well, I understand, but there are a lot more members of the House and the Senate. And I'm not being critical. I'm just telling you, that's the way it works around here, and we all know it. Why would you not be supportive? We've already spent $150 billion in the CARES Act. The states have it. We know they're going to have shortfalls. We may not be able to pass another bill. I think it's less than 50% chance of passing another bill. Why would we not allow states, without appropriating any new money, to use that money to address revenue shortfalls that you and the chairman of the Fed both agree are going to exist and be substantial? And why would we not do that today?
Well, Senator Kennedy, I appreciate your bill, and I know I had the opportunity to meet with you and other senators with the president. And if there's bipartisan support for that, I'm sure that the president and I would look forward to that.
What would it take for you to agree to support it? How do I demonstrate bipartisan support?
Again, I think I have a call scheduled with you later today, so I'm happy to talk to you more about it. But again, I think the president and I have said if there is bipartisan support for this and the money has already been allocated, that is something that I assume we'd very seriously go along with. But again, there has to be broad bipartisan support.
Right. How about if there were 60 votes in the Senate? Would you consider that bipartisan support?
Now, would you please be brief?
Again, I would just say I appreciate.
How much time do I have?
You're a minute and 15 seconds over.
I'm sorry. I can't see my clock.
We're going to have to figure that out. Several have had that problem.
Could you have him answer that one for me, Mr. Secretary, Mr. Chairman?
Again, I leave the details to you and the senators there. I appreciate the unanimous support we had previously, but I leave that to you.
I'm sorry I went over, Mr. Chairman.
No problem. Senator Cortez Masto, can you see your clock? Good.
For joining us. Let me start with Chairman Powell. Chairman Powell, interesting conversation we're having with Senator Schatz on the liquidity problems versus the solvency problems. I do know that you have highlighted that some of the sectors, airlines and hospitality, are in rough financial shape. Because I come from Nevada and it is a hospitality generated state where we get most of our revenue, can you speak to the challenges that hospitality and tourism sectors face right now?
Sure. So I think sectors of the economy like that, where the business model is to gather people in one place and entertain them, feed them, fly them around, whatever you're going to do. Those are sectors where it will take some time for, I think, the public to return. That'll happen, but it'll take some time for the public to regain confidence and, adapt to the new world and start traveling, taking vacations, going to restaurants, things like that.
And I'm glad you brought that up, because that's one thing that we haven't talked about, was this notion that when we look to open our businesses, and I think we all, in my personal way, that's what we want. We've got to find this balance about opening our businesses in general. But they're only going to be as successful as the customer confidence that is there to patronize those businesses. And that's not just true for the hospitality industry. That is true for all businesses. I do know that the service and retail has been hardest hit, that business. And my understanding that some of the data that I've seen, over 2% of those businesses have closed permanently already. And so how are we to address this consumer confidence issue? Because I know that is something that you've thought about and talked about publicly, I've seen. What should we be doing?
One thing I'll say is it affects different sectors of the economy differently. The ones we talked about are the ones where it's most important. Other sectors of the economy may be able to recover much more quickly than that, and we certainly hope so. But the number one thing, of course, is people believing that it's safe to go back to work, safe to go out, and that's about having a sensible, thoughtful reopening of the country, something we all want, and something that we're in the early stages of now. That's what it will take for people to regain confidence, I think, and resume their activities, again, at a different pace depending on the nature of the business, the nature of the activity.
Right. And the healthcare piece of it, right? That they'll feel safe going back out if they feel safe that they're going to be healthy and safe when they go into the establishment. Isn't that true?
It will be a combination of getting the virus under control, development of therapeutics, development of a vaccine, all of those things. And also just, I think, seeing what your eyes are telling you. People, you can feel it already that people are doing things that they wouldn't have done 2 months ago, a little bit at a time. And I just think that process will take time.
Yeah, and until that happens, many people are relying on their local governments, the state government as their social safety net, right? They're telling them, looking to local government, state government to tell them how they can stay safe, if they're opening businesses, where the healthcare facilities are, how they can get the testing that is needed and the contact tracing. Isn't it true? That's where they rely, would be on their local governments and the offer.
Yes, and I think that's where the decisions will be made, is at state and local government, also businesses, individual businesses. We talk to a lot of businesses and nonprofits and leaders in all those areas. And what I feel like is, certainly for the larger ones, there's a very thoughtful process going on about this. But ultimately people will make their own minds up. You can change the formal social distancing measures, but ultimately people are going to decide what they should and shouldn't do with themselves and with their families. And I think that will boil down to having pretty good confidence that it's safe to go out.
Yeah, and I agree with you. And I also know, at least in my state, that many are waiting and relying on their state and local governments to weigh in and help them make those determinations and set those guidelines and make sure their communities are safe. That's why funding for our state and local governments is so important. And I cannot stress that enough, not only in the next fiscal package that needs to come into state and local governments, but you also touched on it, the municipal lending facility. I would like to see more of that available to smaller populated states and local governments. Nevada has 3 million population. There has to be a way to also give them the opportunity to get the liquidity or the funds that they need to ensure that they're providing that safety net, that social safety net to consumers in general. I know my time is up. Secretary Mnuchin, I have questions for you as well. I will submit those for the record. Thank you both for joining us today.
Thank you. Before I move to Senator McSally, I'll announce to those remaining that a vote started about 10 minutes ago, and we still have a number left to go. So I ask you to please pay attention to the clock. Sorry that it just turns out this way at the end of these hearings. Senator McSally.
Thank you, Mr. Chairman. Chairman Powell, Secretary Mnuchin, good to see you virtually. I want to talk about China. As we know, they unleashed this virus on America and the world with their classic communist cover-up, deception, continued propaganda campaign, costing now over 90,000 American lives, 35 million Americans losing their jobs so far. We don't know who patient zero is. They destroyed samples. They silenced doctors. They kicked out journalists. Impacted international travel to seed this, and their reckless behavior continues to be at the root of all this. As you know, this is why we're here today. We're talking about the economy, which was very strong, now really struggling. People all over Arizona are really struggling because of the calamity that's come from this virus. So I want to, I don't think anybody, I should say, actually, let me just ask, I don't think either of you think there's any reason that we should be rewarding China or Chinese state-owned enterprises or individuals or entities that want China to prosper as we implement these massive initiatives to support the American economy. Is it fair to say neither of you want that to happen?
That's correct.
Chairman Powell?
Senator McSally, that's really not a question for me. We're at the economic response to this.
I know, but none of us as Americans want to see, China or Chinese-owned enterprises prospering. So I want to talk about a company called BlackRock. On March 24th, the Federal Reserve Bank of New York retained BlackRock as the financial agent to operationalize and transact with primary dealers in the primary market corporate credit facility and the secondary market corporate credit facility. As you know, these facilities serve as markets for companies to sell bonds and obtain loans during this situation, this downturn. Typically, there's a competition, a competitive bidding process, but BlackRock was selected for this one. As you probably know, BlackRock is one of the leading investment banks in Chinese funds, including helping Chinese companies list and go public on American stock exchanges. Chinese companies listed on American exchanges are prohibit the Public Company Accounting Oversight Board, or the PCAOB, from reviewing their audit reports. On BlackRock's website, they have a page titled 5 Myths and Realities About Investing in China. According to BlackRock, one of the biggest myths about China is that Chinese state-owned enterprises don't control their economy. BlackRock even tries to back that up with data. I won't go into all of it, but it's ridiculous. BlackRock's ode to China doesn't mention anything about human rights abuses, military responses to the Hong Kong democracy protests, or even that the country is ruled by a communist party. Ironic that one of the world's largest investment banks and allegedly a staple of free markets neglects to mention the fact that communists actually run China, and all while refusing to invest in a number of legitimate and legal industries here in America, but that's a separate issue. So my question is, how and why did BlackRock get selected as a financial agent for these facilities? How much money do they stand to make as the agent? And what, if anything, will prevent BlackRock from taking their profits that they earn to invest in their interest in China and Chinese state-owned enterprises?
So I guess I'll take that. We hired BlackRock for their expertise in these markets. They're actually an asset manager. They are a very large asset manager, which is active in the markets that we're concerned with the primary market and secondary market credit facilities. It was done very quickly due to the urgency and the need for their expertise. We will rebid the contract as we in practice do going forward. Yeah. And so that's where that is. The fees are a matter of public record, and we'll be happy to supply those to you.
But what, if anything, can we do to prevent any of their profits from this to actually benefiting China and Chinese state-owned companies, which they're severely invested in?
You know, I would just say this: all large asset managers buy Chinese securities. These are global asset managers. It's in no way. You know, I'm not here to defend or criticize them for that. It's not really relevant to the work we want them to do. What we're trying to do is create conditions in which U.S. workers can keep their jobs or return to them. And that's what our sole focus is. We're not trying to reach out for other public policy objectives or deviate from that. We have a laser focus on that. And we concluded that this company was the right one to be our fiscal agent in this place. Their views on anything else are really not important. What's important is that we do everything we can to support the United States.
Well, let me just say it's important to all of us, and thank you for all your leadership on this, to support our economy, to support jobs, to get our economy back on track. But it's also important that we wake up as Americans and that we hold China accountable, and that they're not allowed to profit because of these investments taxpayers are made. So I'm going to follow up with you on these issues. I really think BlackRock and others need to also wake up and do their patriotic duty, see what's going on here. China, communist China, should not be profiting off of unleashing this calamity on the world. And that should be something that should unite all Americans, even if they work at BlackRock.
Thank you. Senator Jones.
Thank you, Mr. Chairman. Quickly, I'll follow up. I agree that we need to hold all people accountable. China, the WHO, folks in this administration, everybody needs to be held accountable if they had deficiencies in what was going on in this pandemic. So, Secretary Mnuchin, let me say I saw recently that the Treasury is going to begin issuing debit cards for Americans for their direct payments. You will recall that Senator Cotton and I sent a letter shortly after the passage of the CARES Act encouraging that. So I appreciate your willingness to do that. I think it's going to quickly get money to millions of Americans that haven't received those direct payments as of yet. I wanted to also ask you about the payroll protection program. As we've talked about a little bit early on in the first round of funding, there were some problems with the banks, and there were underserved communities that are not getting their funds. And I think we've tried to correct that and doing much better. But the SBA Inspector General issued a report in the wake of that that recommended that the agency start collecting demographic information on who got those loans. Can you commit to work with the SBA administrator to make collecting demographic information mandatory for these PPP loans so that there is that much needed transparency?
Well, I can tell you in the forms that the lenders are required, there is demographic information. We've been advised to make that optional and not mandatory. But we very much hope that people provide that. And let me just say, we're very much committed to make sure that we serve the underserved communities with the money we have left.
Great. Thank you. Chairman Powell, you know, I also saw your speech and read your comments, saw the 60 Minutes piece, and it kind of reminds me, in listening to some of the comments about this, is what Judge Taylor in To Kill a Mockingbird said, that, you know, people are going to hear what they want to hear and they're going to see what they want to see. What I saw is a call to action from that. And one of the things that was talked about, that 40% of the Americans that have lost their jobs and how it's affecting our minority communities, not only in their health and the disparities. What is being shown a spotlight is the disparities on so many things. And you mentioned how this pandemic can exacerbate the existing gap of wealth and assets and ownership between minorities and even just poor people in general. We started this pandemic with about 40 million poor people. It's going to get much better than that, and it's going to be a cause for racial lines. What can we do to try to narrow that gap, to make sure that the wealth gap does not even get greater as we open back up this economy?
Well, the job losses that have been happening in the service economy, and particularly in those parts where you're dealing directly with people. And that is a lot of less well-paying jobs and that sort of thing. So if you look at the industries that have been really hard hit with job losses, it's those industries. It's restaurants, it's hotels, it's travel, things like that, retail. So, and I recommend, by the way, that report, Survey of Household Economic Decision Making, which we release annually. We just released it, and that's where those statistics come from. There's a lot in there, and it is stunning how quickly households get into financial trouble, how many lower income households have in the way of financial resources. These are longer term problems to deal with. I think for now, this very much calls on us to do what we can to support the economy. And as I mentioned earlier, we have 20-some million people out of work. We want to do everything we can to create a world where they can go back to their jobs or find new jobs. And I think that's something all of us as policymakers should be strongly focused on.
Well, thank you for that. And it seems to be connected to your comments of also making sure that we keep people in their livelihoods, to keep the unemployment numbers down. I think from our standpoint, we have been focused on both saving lives and saving livelihoods. And while we don't want to give folks incentives to stay on unemployment, we certainly do want to give incentives to businesses to open carefully. I would encourage you, if you haven't, to look at the Paycheck Security Program that Senator Warner and others and I are going to be filing this week, so that we can give these opportunities, because I'm assuming that the more opportunities we can give employers to keep people on their payroll with benefits, that would aid in opening up the economy safely and trying to keep us from getting into that long-term recession. Would that be fair?
I'll be happy to take a look at your legislation, proposed legislation.
Great. Well, thank you, Mr. Chairman. I appreciate the opportunity. Thank you for coming, Mr. Secretary and Mr. Chairman.
Thank you. Senator Moran.
Mr. Chairman, thank you. Had I have more time, I would extol the virtues of both the Secretary and the Chairman and their efforts, their team, their public service during this crisis. In the absence of that time, I hope you understand the sentiments that sentence expresses. But I want to focus, I guess, Secretary Mnuchin. We've talked about PPP, and we've seen the consequences, the positive consequences that have come from the program. There are large businesses, Main Street, in which the facilities are being developed to assist. But I'm worried about other businesses. I would use an example, not that I'm lobbying for any company, but an example that comes to my mind in Kansas is Yellow Roadway Trucking Company. Employs almost 30,000 people. It is not investment grade. It has leverage. And it is a company that, in the absence of assistance, the jeopardy of its employees are significant. I think there's a lot of companies out there like that. I think there's a number of other companies in Kansas like that. And I want to make certain that we are doing the things that are necessary to prepare to be of assistance to them. I think Senator Toomey and Senator Warner earlier indicated that very few of us expected Treasury not to have to take losses, that there needs to be some risk-taking here. And I want some kind of assurance that under the B4 program, the B4 facilities, that these kind of companies that are hugely important to the economy can receive some assistance with the facilities at Treasury and the Fed. Secretary Mnuchin, is there some level of comfort I can have?
You have my assurance that we will go back and look at that specific company and see what we can do and get back to you.
But I hope it's more than that, because it's not just that company. There's a number of companies across the country, not just in Kansas, but this is hugely important for.
Just to be clear, companies like that, and as I said before, we want to make sure that there are facilities that companies don't fall through the cracks. So between all the different facilities, we're trying to do as much as we can within our powers.
Let me suggest to you that timing is of the essence, just as it was in PPP. The circumstances companies face today and layoff and furloughing employees are present and around the corner. So I encourage the precipitous but thoughtful action in addressing these circumstances. Let me see if I can get two other questions in. One, do we have a time frame, Mr. Secretary, for further guidance regarding PPP loan forgiveness?
There's some guidance that just came out on loan forgiveness that we believe deals with most of the major issues.
And then second question, Secretary Mnuchin, does Treasury and SBA plan to issue guidance that would allow 501c3 organizations to utilize the alternative size standards for PPP eligibility?
We're reviewing that specific request. So we've had that request and we're reviewing it carefully.
Is that something that's a decision is close to being imminent?
We're going to decide one way or another whether that's whether we can do that. So yes.
Okay. Thank you very much. Thank you, Mr. Secretary. Thank you, Mr. Chairman.
Thank you.
Thank you. And you get a gold star, Senator Moran, for yielding back a minute or so. Our final
have it.
Our final senator for questioning is Senator Smith.
Thank you, Mr. Chair, and thank you, Ranking Member Brown, and thanks to both of you for being here today. Chair Powell, you've talked about how we won't be able to solve the economic crisis without solving the public health crisis, which I agree with. And Secretary Mnuchin, you've said that we need to reopen the economy, and I quote, in a thoughtful way, which I also agree with. So it seems to me that a really important part of being thoughtful is to make sure that Americans have accurate information about what's going on. So I have no doubt that you'll be surprised to hear that a lot of us were taken back when a couple of days or so ago, we heard President Trump's son, Eric Trump, acting as a surrogate for his father, say this. He said they think, meaning they, the Democrats, that they're taking away Donald Trump's greatest tool, which is to be able to go into an arena filled with 50,000 people every single time, right? So that they will, and you watch, they'll milk it every single day between now and November 3rd. And guess what? After November 3rd, coronavirus will magically all of a sudden go away and disappear, and everybody will be able to reopen. So this is the kind of misinformation that concerns me greatly. Secretary Mnuchin, are you aware of any evidence that what Eric Trump said, that his assessment is accurate?
I didn't see Eric's comments, nor do I think in this setting it's appropriate for me to comment on it one way or another.
Well, I don't think it's accurate, and I think it's exactly the kind of misinformation that is so damaging to our and undermining of our both our economic approaches and our policy approaches here. But let me ask you, Secretary Powell, even before the COVID-19 crisis, many Minnesotans were struggling to find an affordable place to live. And last year, I spoke with hundreds and hundreds of Minnesotans and family community leaders about this challenge, housing developers as well. And they all told us that at every part of the housing continuum, from housing for homeless people and supportive housing all the way up to workforce housing, that this is a significant problem and a significant affordability challenge. And so now we have this coronavirus challenge. So I, along with many of my colleagues on this committee, have been pushing for support for housing, $11.5 billion for homeless assistance, $100 billion for rental assistance, and $75 billion to stabilize homeowners. Chair Powell, could you talk a little bit about the importance of the housing sector in our economy right now and what challenges you see ahead for us as we are living through this crisis? And I appreciate what you said. The most important policy objectives should be to keep people in their homes and keep them paying the bills.
So these are longer running problems, which are of course under particular pressure right now. But as an example, a lot of the jobs are in big urban areas more and more. That's where the job creation is, and yet the cost of living in those places is higher and higher, very high. And often people who are in the service industries providing their services have to commute very long times to be able to afford to live in a place. So it's an issue that's been with us for a while. It's not one really that the Fed can affect much other than by affording, fair lending laws and things like that. But we can't really directly affect those, but they are important to our economy.
Well, and I realize that you don't want to comment specifically on the specific policy issues that we have confronting us here in Congress, but in general, do you see a risk to the housing market as the economy continues to take a downturn in the months ahead?
Well, I think there are multiple risks. One is just to the extent forbearance doesn't do the job, you may have people losing their homes. That's something, given that this is a natural disaster in a way, that's something that would be great to avoid. You also see the housing industry coming, I won't say to a halt, but under great pressure. Activity being slowly, that's a lot of jobs right there. So I think, really it comes down to sensibly, thoughtfully opening up the economy in a way that builds confidence and keeps people safe. I think that's really important that we do that well. And if we do, these other things will take care of themselves over time.
This is an issue that I think we should continue to work on and talk about the challenges that people will have if they do lose their home, the ripple effect of people not being able to pay their rent or their mortgage, and then the impact that has all the way up through the housing continuum, I think is a great concern. And if you don't have a safe place to live, then nothing else in your life works. I believe that this is something that's really important for us to address in the next package. Thank you very much, Mr. Chair.
Thank you, Senator Smith. And we have also been joined now by Senator Sinema. So she will be the last questioner. She will be with us on audio only. And thank you, Senator Sinema. If you finish in your 5 minutes, I may make it to the vote.
Well, thank you, Mr. Chairman, and thank you to our witnesses for being here today. Everyday Arizonans from every corner of my state are worried about their health and their future. And that's why my office has doubled our state team to better serve Arizonans during this difficult time. Our goal is to offer top-notch constituent services, connecting Arizonans with resources, and going the extra mile to ensure they get the assistance they need. I'm glad that we're having an oversight hearing today because robust congressional oversight is critical to ensuring we know where the CARES Act money is going and how it's going to be spent. It's also vital to ensuring that Arizonans are not stuck in government bureaucracy. I'm focused on cutting through that red tape to help Arizonans. My first question is for Secretary Mnuchin. Let's start with the economic injury disaster loans. I sent you and Administrator Carranza a letter on April 17th outlining my concerns with how the administration has run this program. I have not received a response. The CARES Act promises small businesses a $10,000 loan advance within 3 days of their application. I know Arizonans who went through this process. None of them got their loan advance within 3 days, and no one received the full $10,000. Why aren't they getting that full amount, and why aren't they getting it on time?
Well, first of all, let me just apologize that you haven't received a response. I will look into that after this and get back to you. As it relates to the EIDL program, again, that's within the SBA, but let me just comment that the SBA had significant systems issues getting the EIDL program up and running. I thought the grants were doing much better than the loans, so I'll follow up and look at that. On the loans, they're rebuilding the entire system because I think, as you know, we have over 5 million loans to process, but we will follow up with you.
As you know, the SBA internally changed the policy of EIDL to only issue $1,000 loan advances per employee up to $10,000. The original plan was $10,000 per company. Who authorized the change and why was it made?
I believe the SBA administrator made that change, and I believe her thought on that was that there was limited money and try to spread it out amongst as many companies as possible.
And she did not think to herself, let's go back and ask Congress to authorize more funding to pay for that which they appropriated and called for in the legislation.
Well, there was additional money in the second phase, and we appreciate that Congress reacted to that.
Okay, but Secretary, my question is that the SBA made this internal change without getting authorization from Congress. And if they're saying they did it because they didn't have enough money, we then gave more money and they still haven't used it to give that money to people as promised as the $10,000 in the original legislation.
As I said, I'm more than happy to follow up with you. I'm not involved in some of the direct specifics of that. So let me follow up with your office.
I appreciate that, Secretary. The last thing I'll say about the EIDL loans, my office is right now working on over 300 outstanding EIDL cases. Some of them are dating all the way back to early and
I commit we will work with the SBA to follow up. That's not acceptable. So we'll follow up with the SBA with you.
I appreciate that. I have some questions about the Paycheck Protection Program as well. Small business owners in Arizona are asking for guidance on how the loan forgiveness works, and the lack of guidance has made it difficult for small businesses to plan. We received some guidance last Friday, and there's more still to come. Could you tell me why it's taking so long to get guidance for small businesses on the loan forgiveness aspect of PPP?
We'll just comment. I think, this was a very complicated program that we set up in a short period of time. I thought that the guidance we put out dealt with all the issues, but if there's specific issues that you're hearing from, we will follow up with you and provide that clarity.
I appreciate that. We would like to follow up specifically. As you know, the application to get your PPP loan was only 1 page long, but the forgiveness application is 11 pages long, and according to my staff, requires a minimum of 3 hours to complete. This is a real problem for mom and pop shops in Arizona. What efforts can we offer to assist small businesses in filling out the complex form?
Well, I can assure you I spent a lot of time on the complexity of that. We tried to get it as short as we could under the requirements of the law. I hope it doesn't take 3 hours for small business. But again, we tried to make it as short as possible.
I appreciate that. Mr. Chairman, I see that my time has expired. I would like you to make it to the vote. I have many more questions. I'll submit some of them in writing. Thank you so much, Mr. Chairman.
Thank you, Kristen. I really appreciate that. And I understand Senator Brown wants to make a 60-second statement. You can do so, please.
I will do 60 seconds. Thank you, Mr. Chairman. Another successful hearing. Thank you, Chair Powell and Secretary Mnuchin. I wear on my lapel, as I've said before, a pin depicting a canary in a birdcage instead of the official Senate pin. You all know the story. The mine workers took the canary down in the mines to warn of poisonous gas. You didn't have a union strong enough to protect them in those days, or a government that cared enough. That's why we had the New Deal with worker protections and public health. Now, a century later, it's starting to feel like we're back in the mines. Millions of American workers don't have a union to protect them after decades of corporate attacks. And based on the responses we've heard today and what we've heard, especially from the president over the past few months, it seems that once again, workers don't have a government that cares enough to protect them. I mean, look at how the administration treats essential workers, women, especially African-American, Latino workers, putting their lives on the line. Look at who they're willing to spend money on. This administration, it tells us everything we need to know. That's why Congress needs to stand up for workers. It's why workers need unions, so we can fight back for economic security and safety protections and the dignity they deserve, and for American values. So, Mr. Chairman, thank you for allowing me the last minute or so.
Well, thank you. And I also want to thank you, Senator Brown, for your cooperation and working with us to have this hearing and help it to work out. I appreciate the cooperative way in which we have been able to work on these hearings. I do disagree with the notion that our secretary and our chairman here are not working very hard to make sure that the support we have voted on gets out to those very people, those who have these lower paying jobs, those who are in the service industry, the small businesses, the medium-sized businesses, and those places that will be needed to stand up our economy as we have the opportunity to do so. So we may have a different point of view on that, but I do appreciate your support in helping me get this hearing set up and working. And to our witnesses, Secretary Mnuchin, Chairman Powell, I again appreciate your cooperation and work with me as we've put together this hearing. We are plowing new ground here in the Senate, as is happening across this nation while we deal with COVID-19, and your cooperation in working to get us through this hearing and get your report to us is deeply appreciated. With that, I will say that for senators who wish to submit questions for the record, those questions are due on Tuesday, May 26th